Whether you're looking for a low rate on a personal loan or working on a mortgage for your growing family, your credit score will play a key part in the loan process. It's the number that will determine what interest rate you will be offered. A person with excellent credit will be offered the best rate on an auto loan, for instance, while the rate for someone with a low score may be much higher. When a score is very low, a lender may hesitate to approve the loan. This is why taking steps to improve your credit score is so important. Here are a few ways to make that happen. First off, always make your payments in full and on time. While your credit score is composed of many factors, your payment history makes up 35% of your score. Missed payments can negatively impact your score by 60 to 100 points, and it may take a while for the effects of a missed payment to no longer reflect upon your score. You should also keep your credit utilization, which is how much of your available credit you are using, as low as possible. Your available credit is made up of all your revolving lines of credit, like credit cards and personal lines of credit. It is recommended that borrowers keep their credit utilization at 30% or below. This means if all your available credit adds up to $1,000, you should try to keep from owing more than $300. Let's look at another example. Say you have that $1,000 limit credit card, as well as a second credit card and a personal line of credit with limits of $3,000 and $5,000. That adds up to an available credit of $9,000. Now, let's say you currently owe $4,128 across all three. Dividing 4,128 by 9,000 gives us a credit utilization ratio of 45.8%. This is 15.8% more than recommended and could ultimately negatively influence your score. But why? It's simple. Financial institutions view a low credit utilization ratio as a sign that you appropriately manage your finances. It's also a sign that you aren't overspending. One way you can improve your credit score by a good amount is by asking for a limit increase on your existing credit card or personal line of credit accounts, or opening a new revolving account. Applying for a new revolving account may negatively impact your score by a few points, but if you don't increase your spending, you'll see a larger improvement in your score. And remember, don't make too many purchases in order to keep utilization low. Credit utilization makes up 30% of your overall score. When you add that to the 35% from payment history, these two factors alone are 65% of your score. Three other factors affect your credit score: your credit mix, length of credit history, and new credit. While these are still important, you'll see more improvement in your score if you start by focusing on your payment history and utilization. We hope these tips help you on your credit journey. Did you know that Florida Credit Union members can get access to their FICO credit score each month for free? Learn more at flcu.org. Florida Credit Union. Member owned, community proud since 1954.